Interestingly, if his policies are pro-growth, and we do think they are, including cutting regulations, then the odds are high that the growth rate in the economy is going to pick up. In his first administration, former President Trump basically said, okay, if anyone wants to introduce any new regulation, they have to eliminate 2 others. And he'll probably put that in place again, if not more. So that, we think, will be very good for innovation and animal spirits.
Former President Donald Trump has won a second term, securing the position as the 47th U.S. president with 277 electoral votes and over 71 million popular vote. The markets reacted swiftly, with several stock indexes reaching new all-time highs following the news. The crypto community, in particular, celebrated the election of the nation's first pro-Bitcoin and pro-crypto president, with many industry leaders expressing excitement on social media. Cathie Wood, founder, CEO, and CIO of ARK Invest, has been vocal about how a Trump presidency could accelerate the growth of transformative technologies. In a YouTube video released just before the election, she shared her perspective on how blockchain and other disruptive tech could rapidly advance under Trump's leadership, noting that federal deregulation, a signature Trump policy, could drive substantial innovation. Wood stated that, if Trump reduces regulations and government spending, she expects an unprecedented boom in 5 major innovation platforms: robotics, energy storage, artificial intelligence, blockchain, and multi-omic sequencing. According to Wood, these technologies are now positioned for exponential growth and will thrive freely under the new administration. The crypto market appears to echo Wood's optimism, with Bitcoin's price surging since the election. Data from CoinMarketCap reveals that Bitcoin has risen over 8% in the past 24 hours, reaching a new all-time high of $75,900. Wood believes this could be just the beginning of a larger tech-driven economic surge. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
This is from Predictive, I think that's the name of the survey. And you can see here the S&P 500 is the green line, and the odds that former President Trump will win, that is the purple line. And it's interesting to watch the market's movements as the polls have shifted around. There is a correlation here. Now, I don't know if President Trump is going to win. It does seem like the polls are breaking for him. And so we'll talk about just a few election issues that are on people's minds. Of course, taxes. The market likes tax cuts and has been worried that the tax cuts in the original tax bill that was passed under President Trump, that they are going to expire at the end of 25. So one reason the market is behaving this way is, of course, he is not only going to be a proponent of extending those tax cuts, but he has said he would like to introduce even more tax cuts, personal tax cuts and corporate tax cuts. Now, the other thing that he has suggested and is beating the drum on are tariffs. Now, the market generally does not like tariffs. I don't like tariffs. I don't like any tax increase. But I think what we're beginning to understand is that the tariff talk is a negotiation already with our trading partners, but it is also a trade-off, much like in the very early days of our country. We didn't have the personal income tax. all we had were tariffs, and these started under President Washington. So I think the market is beginning to understand that we're talking about, one, a negotiating posture here, so posturing, but two, we might be thinking a little bit about going back into the world that we actually did enjoy in the early days of this country. So that's interesting. The other thing that we hear former President Trump talking about is the dollar. He wants the dollar down. Ironically, the dollar going down is good for multinationals. But the dollar going down typically does not happen when the terms of trade start to favor the U.S. And cutting taxes is definitely helps in terms of trade. The return on capital in the United States to the end investor goes up, all other things equal. That tends to be good for the dollar. It tends to invite capital flows. So maybe this is going to be rhetoric after all. Interest rates, another topic that former President Trump is pounding the table on. He wants interest rates down. Now, interestingly, if his policies are pro-growth, and we do think they are, including cutting regulations, then the odds are high that the growth rate in the economy is going to pick up. As you know.
According to Cathie Wood, the U.S. has been experiencing a rolling recession for months due to the Federal Reserve's aggressive interest rate hikes since 2022. These increases were meant to curb inflation, and while headline data suggests success, Wood points to small business optimism, currently as low as during the 2008-09 crisis, as evidence of lingering economic challenges. Consumer confidence is also declining, hinting at deeper issues affecting the economy. Wood believes that, with Trump's win, pro-growth policies will be introduced, easing rates over the next year and keeping them low until a genuine economic boom necessitates an increase. She likens her expectations for a Trump administration to the rapid growth of the Industrial Revolution, fueled by innovations like the telephone, electricity, and the internal combustion engine. In her video, Wood highlights regulation as a key factor for swift economic growth. She argues that excessive regulation stifles innovation and is confident that Trump will, as in his first term, implement strong deregulatory measures, fostering a more innovation-friendly environment. Now back to the video.
Let's get back to the video.
So here you can see the deficit. It is not anywhere nearly as bad as it was during COVID, but we've never seen anything like that in history. It is not that far, however, from where we were in 08-09, and it's worse than in the early 80s when President Reagan came into office and the deficit got to 5%, which at that time had been unheard of. And the bond market was very upset. Investors were very upset. I think the bond market has been responding since the Fed cut rates. You'll notice long rates went up, and I think that's a response to the upcoming election and the focus on the deficit spending that both candidates seem to be talking about. Now, we believe that the deficit is going to shrink in the next few years because we do believe that growth is going to accelerate. The best way out of a deficit is real growth. And you saw that happened in the 80s under Reagan. Once we got through with the bad recessions and once the defense spending was intact back then, the deficit improved. It was cut in half. We believe that could happen again, especially in the environment I just described. And the other reason is because former President Trump is now focused on it. He wants to make Elon Musk the government efficiencies are. Now, I don't believe that Elon will take an official post in this administration if President Trump is reelected. But I do believe he'll put into place some rules-based system, much like the regulatory system I just described, that will cut government spending. Now, he says he could cut government spending by $2 trillion. I'm going to show you a few charts now, which will suggest how difficult that will be. He doesn't give us a time frame, and this could be over a decade. That's very possible. But you can see right now that outlays at $6.1 trillion are 22.7% of GDP. And you can see that only 1.7 trillion is in discretionary areas that can be cut. President Trump has said he is not going to cut Social Security or Medicare outright. But I do think that with the use of artificial intelligence, that we're going to see much more efficiency in the government, and that attrition alone, just individuals, employees leaving the government system, not replacing them, would go a long way during the next 10 years to shrink expenditures by $2 trillion. So, of course, we can't do this in 1 year, but over a number of years, we think it's quite possible.
In other news, Real Vision CEO Raoul has officially announced the start of the Banana Zone. In a series of tweets today, Pal shared humorous memes about this phase, with one caption simply, "The Banana Zone." In a follow-up tweet, he cautioned crypto investors to stay grounded and avoid using leverage, saying, "You've come this far, so please don't lose your mind. Do not use leverage, and don't let FOMO push you into rash decisions. Expect 30% plus pullbacks right when you're feeling the most bullish, so please don't mess this up. The last 8 months were your time to add." Do you agree that the Banana Zone has begun and that crypto prices are set to skyrocket? What's your strategy for navigating this period? Share your thoughts and strategies in the comments below.